What is going on, guys? Welcome back to the channel. We nailed it in the last video, but I do want to go over more in depth what is going on today with the move that we are seeing, give you guys more of a daily prediction, how high I think we could go. We are now approaching 7% with a massive move to the upside. I do want to go over the option chain because there is a ton of open interest, and I want you guys to be fully aware how the low volume that we have been seeing on any given day now playing into seeing as many options that are running into the money as they are today, how that is playing in together, why we are seeing this big move, what exactly is a gamma squeeze for those of you guys that don't know, do a little bit more of a macro technical analysis update as well. So drop that like on the video, consider subscribing to the channel. Let me know down below in the comment section, what is your prediction for this rally? What do you think is going to happen? Let me know that information. Your guys' opinion is very valuable. But just to tell you guys, I'm not a financial advisor, not a financial planner or your dad. So ultimately, come to your own conclusions, have conviction in your conclusions, so you stick with them and follow through and make those fat tendies. Now, let's talk AMC, up 6.35%. Very, very, very volatile. You could put a lot of varies right there. We are volatile today. We are at 23 million for volume. And no, I don't think shorts are covering. That is not the case. You're seeing a gamma squeeze, something that we have talked about for a while now. You're seeing this break above $40, currently at $40.31. Obviously moving around a lot, so it might be a lot higher or lower by the time you guys do see this video. We're starting to see a little cool down. Now we're only up about 6.20%. Still, this is a massive move, a massive win for all apes. And if we're looking at this, in a more macro sense, we were at about $28 back here during the start of August. So we are still up substantially from where we were, about $12. So the overall picture does continue to be bullish. And as you guys can see, the 200-day moving average continues to climb as well. So right now, the technicals looking very bullish. As you guys do know, we've been talking about this cup and handle formation. If this cup and handle formation does actually play out, I would expect a little bit of sideways trading right here, even to go down a little bit, and then that's where you get the handle formation, and then you should see that monstrous rally to $45, $50 per share. I don't know if that's going to play out. We could just start to fly from here. Given everything we're talking about, it looks more likely we will just fly from here. Now, the $40 level, that was the first level we really needed to break above, and we had a clean break above that. We have to make sure that the selling volume does not come back into the stock, which it is not happening right now. And the higher we do get above $40 per share, the less likely we are to go under $40 per share, which is a very bullish thing. And I think overall as well, a lot of trading algorithms have been waiting for this breakout above $40 per share. So I think there's a lot going on. I think there's trading algorithms that are buying up the stock because we just broke over this technical breakout level. I think you do have some traders and even investors that are buying more AMC for earnings coming on November 1st. But probably, arguably, the biggest thing that is happening today is going to be this gamma squeeze and the option chain. Now, let's break it down a little bit. AMC crossed $38 in the beginning of trading today. That was about 11,000 for open interest. That does control 1.2 million shares that will have to be hedged for, because as we do know, market makers control about 90% of the back end obligations of the open interest, or just calls and puts in general. We are typically the buyers of premium. They are typically the sellers of premium. And to hedge out these options, they have to go out on the open market and buy shares. At the $39 strike, you're looking at 9,236 for open interest. That controls 920,000 shares that will have to be bought. At the $40 strike, which is by far the most important strike that I have been watching for probably the last 2 weeks or so, ever since this option chain October 15th has started to populate and really grow in open interest. $40 strike at 30,000 for open interest. That controls 3 million shares that will have to be hedged by the market makers. As long as AMC it remains above $40, it looks like we're going to see a slow hedging effect from the market makers. They're not going to rush to hedge all of these these contracts and buy a ton of shares. They're just not going to do that. They're going to hedge slowly and slowly and slowly. The higher AMC does go, the more hedging will be done. But even at the $40 strike, regardless of the 38, 39, or anything else that might go into the money, at the $40 strike alone, that's 3 million shares. Like I said, if you pull this out to the volume that we are seeing on any given day, on most typical days, even yesterday at about 24 million for volume, that's about 15% of the total volume yesterday, just of the shares that would have to be hedged for on this $40 strike. So the situation looks incredibly bullish right here. Even at the 41, you were looking at 11,471 for open interest controls, about 1.14 million shares that would have to be covered. $42 strike, 8,300 for open interest. $43 strike, almost 12,000 for open interest. $44 strike, 10,000, and the 45 at almost 20,000. So at this $40 strike, you're seeing the most for open interest. That's why we are so volatile right now. But still, up until the $45 strike, you're seeing almost over 1 million shares that would have to be hedged for almost at every single strike. Every strike besides the $42 strike, to be more exact. So I don't think this rally is over whatsoever. You guys can see the implied volatility is going up even more. That just, basically means the implied move is getting larger for AMC stock. And it also means that these market makers will start to hedge some of these further out contracts beforehand, just because the implied move is getting to be much higher, and they don't want to get caught holding the bag or losing money on their position. So that's what you guys need to know from this as far as actually how a gamma squeeze does fully play out. So you buy a $40 call, let's say, for open interest, there's 30,000. You bought a $40 call for $54 or whatever you bought that for. The market makers, they have to sell you 100 shares at $40. So when the price of AMC is $30 per share or $35 per share, they're not going to buy the shares to sell them to you at $40. You're not going to exercise your call to buy shares at $40 when AMC is under $40. But once AMC per se does start to go up and over $40, that's where you see the market makers starting to hedge these options by buying the shares. And for every one contract that you own or anybody owns, that is equivalent to 100 shares. So to make sure they don't lose money, because obviously when you're selling calls, AMC could go to $1 million. You would bankrupt your fund. There would be infinite risk on that. Stocks can go up as much as they want. They can't go down as much as they want. So they will hedge out these calls, or the back end of these calls that they sold to you, because statistically selling premium is profitable about 85% of the time. So it's not too often you see these gamma squeezes where that 15% of the time goes against you. It doesn't happen very often, but when it does, you can see big moves like we are seeing today. I don't think this move is over whatsoever. Like I said, we do have a lot of open interest that still is on the table as long as we stay above $40 per share, which in my personal opinion, by the end of the day, we could be looking at about $42, $43, even $44 per share if we do start to see more of those FOMO buyers start to kick in, as well as, everything else that I have talked about. That's really the X factor that we don't know about. But due to everything that we have talked about over these past videos, I think the X factor is still very much alive, and I think it's going to play its role and show its hand more in these next coming weeks, especially by earnings or after earnings. And what I want to leave you guys off with, yes, we are seeing a slight pullback down about 1% from where we were at about 7%, now at about 5.5%. No stock is going to go straight up in a straight line. What you should be watching for is that consolidation, that slight pullback, and then a rally higher for higher highs for the day. So that's going to be all for this video. Hit the like button for me. Consider subscribing to the channel. Let me know down below in the comment section, what do you guys think about all of this information? Let me know your price targets. Let me know what you think is going to happen for earnings. All of that is very valuable to me. As well as that, get some free stock with Public and with Webull down below in the description of this video. And if you guys want to get notified every time I make a trade, every time I buy or sell a stock, option, or crypto in real time, check the link out for the buy and sellers, also linked in the description of this video. So that is going to be all. You guys take care. I will see you in the next one.